Hi everyone, and welcome to the Everyman Investor. It's been a while since I last posted a video, mainly because I was sick and also because the market has been rather lackluster recently. So let's imagine this is Chairman Powell at the top of the world with his higher for longer message. He just actually faced Congress, and let's see what he said. So he said that peak rates have likely been reached, which means no more rate hikes, which is part one of good news, but that there's more concrete evidence of decreasing inflation needed before he can consider rate cuts. However, he did say that rate cuts are likely, but not anytime soon, which is sort of not so good for things in general. And the next Fed meeting is actually due on March 19th to 20th, and the new dot plot will be released after the March meeting. It's released every quarter. So as you can see, over the past 2 weeks or so, the market hasn't been doing anything. This is the SPY. This has been trading up and down and up and down. There is a slight upward trend, but other than that, nothing much going on. So there was a nice pop post Nvidia's earnings, but since then, it's been sort of in a trading range. And actually, tech has pulled back recently. So Apple has pulled back quite a bit based on the dropping sales in China. Nvidia has also pulled back a couple of reasons. One is that it has really run up a lot and it's probably a bit of profit taking. Secondly, so a couple of news regarding semiconductors. So Microsoft and Intel have sort of teamed up. Microsoft wants Intel to make its next generation AI chips for it. And given that Microsoft is probably one of the biggest users of AI chips in the world, that will significantly affect many other chip producers, especially those that supply at the moment. Now, the thing is that Meta, Facebook actually has said that they will still be using Nvidia chips and they're buying billions of dollars of Nvidia chips. So I suppose the business is still there, but given that it takes time to design and then manufacture the chips, so for Microsoft, it probably take a couple of years for it to stop being reliant on Nvidia's chips. Then there's OpenAI. So OpenAI, basically, Sam Altman, the CEO, has stated that he wants to raise trillions of dollars to set up a chip infrastructure in the US for AI users. Um, and if he does not include NVIDIA as part of that chip infrastructure, I guess NVIDIA sales will probably take a beating from that. Tesla in general is just not doing very well this year. In fact, it hasn't been doing well for a while already. Mainly EVs are no longer hot and hybrids are the new in thing. Plus, Elon Musk is getting into a fight with OpenAI about OpenAI being a profit organization rather than not for profit. And then OpenAI released emails showing that it was Elon Musk who said that they need to have profits. So it makes no sense to me, but yeah. And earnings season is winding down. This earnings season has been somewhat interesting, especially in the cybersecurity space. So Fortinet did really well after last quarter's issues. Palo Alto did really badly in terms of its guidance, but actually its EPS and its cash flow have not been revised downwards. So the thing is that Palo Alto actually states that so there was a line in the conference call that said that there is fatigue in cybersecurity spending, which actually got everybody really panicky until the CEO explained that it's actually not fatigue. People still want to buy cybersecurity products, but they are tired of having to have 4 or 5 different products to protect themselves from different threats. So Palo Alto is going towards a platform structure whereby they will offer platforms with multiple products on the same platform to companies, and then the companies will not pay them for whatever subscriptions they still have outstanding. For example, say they've got a firewall service with somebody else, the Palo Alto will not charge them for the firewall until their contract with that somebody else has expired. So which is why the guidance was sort of lowered. Now, interestingly, Fortinet actually did a platform structure already, and they have got multiple solutions on one platform. So which is why I said that it's important to dig into the call, because the call will tell you where the company sees its business going. Now, the last part of the whole situation was that CrowdStrike actually came out with really great earnings, and they said there was no fatigue that they could see whatsoever. Sort of took a shot at Palo Alto, which was really hilarious. But yeah, actually I bought more Palo Alto after the drop. So the next stimulus, either way up or down for the markets, is likely to be due to depend on CPI, which is due next week, and the Fed meeting and the dot plot, which is due a couple of weeks' time. Now, how's the economy doing? So, okay, actually I missed out, but GDP came in positive, which is positive. Now PCE, which is the most important thing for the Fed, is in line with expectations. It is dropping really slowly, like really slowly. Yeah, but as long as it doesn't go above expectations, I guess the Fed will be neutral. Manufacturing is still contracting below 50. Services as I think at 52 at the moment, which is barely expanding. Job creation was 275,000 this reporting versus 200,000 expected or thereabouts, which is way too hot, which is another reason for the Fed not to cut. Unemployment actually rose from 3.7 to 3.9%, but most economists say 4 to 5% is probably the right range to settle inflation, so it's still hot. CPI and PPI are due next week, which is just before the Fed meeting, which means to say that it's kind of scary because the Fed will probably pick up on it. If it's too hot, especially if it's too hot, if it's too cold, the Fed will probably just pretend it didn't exist. So thank you for watching. Earnings season has pretty much wound down. Next earnings season starts in April. I will probably put out a video if CPI comes in really bad, and definitely put out a video after the Fed meeting to update you on how the Fed sees interest rate going, especially with the dot plot coming out this quarter. I would say that there are always chances to buy in every earnings season. So like last earnings season, I bought Fortinet. And the same people who sold the shares to me at $43.50 are probably buying back the shares at $60 plus $70, which is trading it at the moment. So this earnings season I actually bought more Intel and more Palo Alto on weak guidance. Intel has since gone up mainly because of expected government funding for building chip infrastructure, as well as the Microsoft news that I mentioned earlier. And I actually bought another chemical company that actually dropped a lot actually. I think it dropped somewhere in the region of 30% or more after weak guidance again, but the long-term thesis is still intact. So I would say that take a break for a while, but the next earnings season is coming in April, and if you've got stocks you want to buy, it's probably a good idea to keep a close watch on the earnings of those stocks especially. I have still got two more companies that need to report earnings for me this quarter, and I'll see how it goes, but not much more capital left to spend after the buys recently. I bought additional corporate debt fund to lock in the yields before the rate cuts come into the picture. So thank you for watching, and I hope to see you in a week if the CPI is bad, and probably in 2 weeks if the CPI is well behaved, to update you on the Fed meeting and the dot plot. So hope to see you in my next video.